We're half an hour away from the opens in Hong Kong, Shenzhen and Shanghai. You're watching the China Show. I'm Annabelle Droulers with David Ingles.
Good morning to all of you. A Bloomberg scoop. Donald Trump's team preparing to announce Jamieson Greer as the U.S. Trade Representative, highlighting the central role tariffs will play in his economic agenda.
Asian stocks trading a little bit mixed. Wall Street looking past Trump's tariffs plan and a ceasefire between Israel and Hezbollah helping calm geopolitical worries.
Plus, a trading debut this hour. China's biggest express delivery firm, SF Holding, is set to trade in Hong Kong this hour after raising nearly $750 million in its IPO. Welcome to the show. We're straight to breaking news right now. The RBNZ out with its rate decision as expected, taking the cash rate down 50 basis points, predicted by virtually all of the economists you've surveyed. That's number one. Number two is they do see in terms of guidance going into next year, and you already see some reaction in the Kiwi dollar right now. The average cash rate falling to 3.83% by mid-2025. So give or take, before the meeting took place, I had to look at swaps, 150 basis points from 475 into the end of next year. It doesn't seem we'll get there based on the current guidance of 383. You do the math from 425 to 383, that's just about, give or take, about two more cuts of 25 each going into next year. That's the current projection. They do expect, though, the OCR to lower it further if economic projections are met. In terms of employment growth, they expect it to stay weak up until that point in time. In terms of inflation, their forecasts show inflation slowing to get this 2% by the first quarter of 2025. That's the RBNZ story for now. I believe we will have a press briefing later on in the show. In the meantime, though, Belle is here. What else are we tracking here, Belle?
Well, I think from the RBNZ to the Fed, it's really been that story coming through. Weaker dollar dynamics slightly. We've also had that retreat in oil prices. And so these are some of the factors that can assist Asian equities. But still, when you take a look at how we're trading so far in the session, we are just seeing stocks looking pretty range-bound. And actually, I was just taking a look at trading volumes before we came on air. And again, we're off those 20-day moving averages. So it seems like investors are kind of sitting on the sidelines and really trying to digest Trump's tariffs plan. We just had a Bloomberg scoop out in the last couple of hours that Dave mentioned. But Jamieson Greer could be named as the US trade rep. We're awaiting confirmation on that. But he is someone who has been a protege of Robert Lighthizer. So it just tells you tariffs are going to play a central role in the incoming administration. That is certainly being felt across markets. We really saw EM markets pulling back overnight in the session following what we had on Tuesday as well. But you've seen the Nikkei, the Kospi trading fairly flat. Taiwan also just coming online. Let's change on. Again, really the centerpiece of all of this is that relationship between Washington and Beijing. Overnight, we saw the Golden Dragon Index a further slump, closing 0.8% to the downside. And again, setting up for the session today, Dave, what we're seeing for the open here, again, that big focus on what happens with the yuan fix. We have seen it coming in a lot stronger than estimates over the past 14 days or so. Futures here, again, just quite steady with investors really anticipating a couple of different things. One of those is the SF Holding debut, and I've got to say, I don't really feel like the ducks are lined up for IPO of this size for the session.
Well, as a personal note, I did take delivery of something via SF Express just yesterday. So it works. Whether it's priced, and to Belle's point, the size in this kind of markets will result in a very good first day at school, yet to be seen. But certainly we're tracking that going into today. And I think, just to focus on the positives here, we are on bear market watch in Hong Kong still. So just to keep that in mind as far as that is concerned. The good thing, though, is we are getting more listings of this size, Belle, going into today. We'll see how that trades in about 15 minutes from now. The other point we want to make as well is, okay, in terms of data, let's start with that. You have industrial profits out this hour. In about 25 minutes from now, that's for October. We have some occupancy numbers out of Macau later on today. Falling turnover, more on that in a moment. So the turnover yesterday onshore actually fell to a 2-month low. It has been slowly moderating in recent days. So we're effectively back to levels the same week as the PBOC press briefing, September 24th, which kicked off, of course, this massive rally in this somewhat of a retracement back to current levels, not all the way back. Now, as far as the fixing goes, Bell was pointing out, we have a story out, in fact, on the Bloomberg, China drawing this red line on the Chinese currency. They've fixed the midpoint above 7.2 nearly daily, and this chart actually shows you the spread between where the fix has been and where the estimates are, and in some ways ring-fencing the weakness coming through in the Chinese currency. We'll get that in about 10 minutes or so. Suffice to say, with a move up in the US dollar, we expect that to remain the case going into today's fixing. The chart shows you this on the right side of your screens.
But it is that question, how is the PBOC and other policymakers sort of planning to fend off the tariff risks from the US, and how many cards do they have up their sleeve? But going back to that scoop that we had, because Bloomberg's learned that the Trump transition team is set to name Jamieson Greer as the US trade rep. He was a key part of the first Trump administration's negotiations with major trading partners. Let's bring in Bloomberg's Derek Warbank in Singapore. And Derek, I think this really just underscores how central tariffs are going to be when we get Trump back in the White House.
Annabelle, I think you framed it exactly right. You know, this is somebody who, if he is announced by Trump, is someone who was a chief of staff to Robert Lighthizer when he was U.S. Trade Representative. So you're expecting a certain amount of continuity, right? He was involved in some of those discussions from the first Trump administration. Donald Trump has said he plans to have a very similar policy with regards tariff, with regards China. So all of this to me sounds like continuity, right? And I think that's one of the things that I would read in here. You know, Trump has put out a statement on his Truth Social to suggest that there would be 10% tariffs on China in addition to existing levels. You know, that whether or not that actually comes to fruition is something that's very much to be determined. We do have 2 months between now and the start of the Trump administration, so there is some time to be able to cut deals. And the president-elect is well renowned for putting out a threat as the opening point of negotiations rather than at the end point of negotiations. So there is some possibility that there's some flex there. But certainly you are looking for a continuity mark here. One thing that I think I would highlight here is that, and we mentioned this down in the story, so worth reading all the way to the end, but Greer was talking to the U.S.-China Economic and Security Review Commission in May, and I'll read the quote to you. He says, "There's in countering China, quote, there's no silver bullet. In some cases, the effect to pursue strategic decoupling from China will cause short-term pain." He goes on to say the cost of doing nothing or underestimating the threat posed by China is far greater. And I think that's notable because he's not the first person tied to Trump to suggest that some of these moves may have a short-term negative economic consequence, and that they are okay with that.
Yeah, especially, Derek, to your point, and my next question is really hopefully draws on your experience covering this. I mean, these are the three biggest sources of imports for the U.S., right? You have Canada, you have Mexico, and China. And to your point, is this bluff? Is it, you know, the initial foray into a negotiation? Or what if this happens, is my question. How bad is this economically for Donald Trump, and politically too?
Well, I think, David, a lot of people talk about this as like a poker analogy, right? You know, is this a bluff? Is this not a bluff? It's sort of immaterial whether or not it's a bluff if the chips have been pushed into the center, right? Because there's certainly some movement that has gone on there. We have seen examples in Donald Trump's first term of where this was a negotiating position, right? And we've all covered that, and we've seen it go there, and then, you know, maybe there's an ensuing amount of panic and reaction, and then things don't happen. We've also at the same time seen Donald Trump, serious as a heart attack, say that he's going to put these tariffs on. Everyone say, oh, don't worry about it because this is just a negotiating position. And then he goes and does it, right? You know, that was and I think a lot of the case with the relationship with China in the first term anyway. There was a lot of question about was he actually going to do it? And then we did see those tariffs going in place, and they haven't come off. So I would take Donald Trump seriously, even if this is a bluff, even if this is a negotiating position. It is a negotiating position with percentage points assigned. And you know, he ran on the idea that he was going to be tough on China. You know, he certainly had an ability to work with China in some ways in that first term. But I would certainly take him seriously on this sort of thing, even if it doesn't fully come to fruition across all of the various threats that have been made on tariff levels to all actors.
Derek, fantastic wrap up, and certainly context is certainly key there. Derek, thank you so much. Derek Wallbank in Singapore for us. Take him seriously if you're on the other side of the negotiating table. What if you're in markets? Nadia Grant is with us here, Head of Global Equity at BNP Paribas Asset Management, with us in the region. Good morning. Nice to see you.
Good morning.
How do I look at this? There are things we know that he might do. There are things we don't know, which he may or may not do. How do you approach this from a strategy perspective?
Yes, so for us it's really about understanding what we think is our base case scenario. As the person before me was explaining, we know it's going to be it is going to be a hook on China. Tariff on China is almost but certain, and so for us it's about understanding the implication that would have. And so from a positioning standpoint, we think that looking at the impact that tariff would have on the U.S. economy, China is about 15% of U.S. imports, and so if you put the maximum 60% tariff on Chinese imported goods, you would get obviously an inflationary impact, and that would be borne, the bulk of that would be borne by the U.S. consumer. So in terms of our positioning, it would be really trying to make sure that we're less indexed on those companies in the consumer and the retail sector that would have to bear those tariffs, and be more exposed towards the domestic companies that have that do not face any of these tariffs. So we really like themes like M&A, themes where you have a nice cyclical rebound from cyclical trough. We really like also the sort of secular trend within construction because of things like IIJA and the CHIP Act, so the Infrastructure Act, and as you saw, that's further accelerated as you need to roll out data center and that whole made in America. So this is not impacted by the tariff, so we have exposure there as well. And then it's quite negative, obviously, for China, unfortunately, as that would be taking off quite a bit of the growth outlook. So the PBOC would have to further stimulate and respond, and it's uncertain whether they can offset the full blunt of the impact.
That obviously, I mean, there's a couple of different second-order implications. I was thinking firstly about, okay, inflationary environment in the US, that means the Fed stays high for longer, and that does end up impacting the consumer possibly. But you also mentioned China, and there are major second-order implications for this region as well, given the amount of trade that goes on between these countries. So what sort of portfolio repositioning are you doing in terms of countries as well?
Yes, so for us it's really been about understanding, as you said, who have in the region have the big exposure to the Chinese economy, and so it's going to be the exporters. It's going to be countries like Vietnam that have really high exposure, strong ties with China, and so we have pared back our positioning within China, but also across the region. And where we have the highest conviction would really be towards Japan. It's where we think actually they should be more protected from the impact of the tariff.
Is that because politically they're an ally, or like what's the transmission effect from tariffs to a long Japan story?
So there's a lot of idiosyncrasy in the long Japan story. So it's about the fact that the Japanese economy is accelerating. So GDP growth is recovering nicely. Earnings, as a result, are also very interesting. And so earnings growth that Japan should deliver is it's much higher than what you can see elsewhere. The normalization from a BOJ standpoint is still happening. You have nice wage growth, and so you should still see some normalization in rate. And because tariffs are obviously dollar positive, that keeps a lead on yen appreciation, and so that's quite a nice setup for Japanese equity, and in particularly for financials within the country. Yeah.
Japan and then India have probably been the two standout markets for grabbing investor attention this year. Do you see that also continuing into next year?
Yes, I do. In India, we're a bit more neutral because although India is a fantastic structural growth story in the regions, and there's not a lot of them, we think that actually your valuations are very demanding. You don't have so much market capitalization to go by, and also what we're seeing is that you're having a sort of a slowing of the credit impulse and a slowing of the momentum on the fiscal side. So we think that actually it's not as constructive as say it was a couple of years ago, as Modi is a bit more fiscally aware, and so we're neutral. We have exposure there, but a bit more neutral.
What about just your outlook on U.S. equities? It's the time of the year when we get a lot of these sell-side calls and projections in the U.S., everything from 6,500 all the way to 7,000. And, I keep thinking many things need to happen for other markets to rally. Nothing needs to happen for the U.S. market to continue to outperform. And I'm wondering how low that bar is still for you to just leave your money in the U.S. markets, which has really paid off.
Yeah, I think the outlook is really constructive for the U.S., It's
hard to argue against it?
It's very hard to argue against it. I mean, on the margin, what you could say is that, yes, if you have, you do have some potential downside scenario.
Right.
So depending on whether you have tariff solely on China or if you have tariff on all, that could be a game changer for U.S. equity, because obviously tariff on all imports would be very inflationary and could change the course of the Fed. But we don't see that as our base case scenario. And so we think that accepting that scenario, actually, you're still having a really nice GDP growth for next year. So you're around trend growth. You're having the Fed that should continue on its easing path, and an acceleration in earnings growth. So it's a good prospect.
All right. Nadia, thanks so much for your time this morning. Enjoy the rest of your time in Hong Kong as well. That was Nadia Grant, there, Head of Global Equity at BNP Paribas Asset Management. And counting down to the open of trade in Shanghai, Shenzhen and Hong Kong, taking you to a live picture right now from the Hong Kong Stock Exchange. We have a major trading debut just in about 20 minutes from now, 10 minutes rather, but this is SF Express or SF Holding. It's a major courier company and certainly going to be a big test for the investor appetite in the city. More ahead. This is Bloomberg. We've got a big IPO in the city this morning. Trading debut. Shares of the Chinese express delivery firm SF Holding are set to debut just in about 10 minutes from now. It's going to be the city's final major listing possibly of the year. Let's get more with our Asia Equity Capital Markets reporter, Julia Fioretti, joining us. And talk to us, because it's sort of been a lackluster IPO market for, well, a long time now, but it does seem like the pipeline is sort of heating up a little bit. So what does this tell us about the listing market?
So the pipeline has been heating up. The issue has always been whether the pipeline can actually get done. And so what we've seen in the last few months is that some of these deals, these larger deals of established companies, can get done. And they have attracted global investor demand, the likes of which, frankly, we haven't seen in the last few years. They've just stayed away from Hong Kong IPOs and Hong Kong deals because of the uncertainty and the pessimism over China. So now that seems to be changing. So certainly looking up a little bit. Companies are able to raise funds if they're sort of established in their fields and they can get that demand and trade well in the aftermarket. Obviously, there's still a lot of uncertainty for next year, given Donald Trump and obviously continued question marks over the Chinese economy.
Just looking for initial pricing, not just yet. How do we expect this to do today, given just take-up and all the other things that go into the first day?
Well, looking at the grey market, it should do well. Yesterday, it was up as much as 5.5%, so it's not a huge jump, but it's perfectly acceptable for Hong Kong standards these days. It priced at the midpoint, so that showed that they were trying to leave some money on the table for investors, so that's normally a good sign. So far, the indications are positive. Obviously, this is just the first day, so a lot will depend on what it does in the coming weeks and months. China Resources, for one example, beverages, it was up on the first day, and now it's pretty far down. So,
yeah, sort of when you stack that one up, Medea, this one today, how do you think that's going to fare or bode for any sort of listings and expectations around that for 2025?
Well, so the fact that these deals got done and on the whole they did well certainly bodes well for 2025. There's some sort of optimism in the market. There are companies that are lining up to do similar deals. The trend of A to H listings will continue. Obviously, a lot depends on what happens on the geopolitical front, but certainly it's looking a little bit better than it was this year. So if that plays out, then it's probably not going to be the broad reopening that people have been hoping for, but hopefully we've turned a corner.
Julia, thank you so much. Warming us up, of course, is Zephyr Holdings trading debut today. Right, okay, let's get to some breaking news. This is according to the FT, and China's defense minister has, based on their sourcing, has allegedly been put under investigation for corruption. I'm just going through the story here. We're looking at, so he is the third consecutive serving or former defense minister to be investigated for alleged corruption. We're looking at, I think this is Admiral Dong Jun, who was named, of course, back in 2023, if I'm not mistaken here, after his predecessor. And we mentioned, of course, the third serving defense minister there to be come under a similar narrative taking place. We won't speculate at this moment. That's what we know so far. That's according to this FT story. And, of course, we'll stay on top of this story, of course, Belle, going into the rest of it, if we find out slightly more details on really what else this entails.
Yeah, well, we have seen that sustained anti-corruption drive in China, and there was another story as well just overnight talking about the ex-Bank of China chairman who's also been sentenced to death with reprieve. So Liu Lanka receiving a death sentence or suspended death sentence
with reprieve.
With reprieve. So essentially, it's a 2-year period where he could be spared from death if he does have, I guess, good behaviour during that period. But he is someone who was found to have accepted over 120 million yuan in bribes, and he also illegally facilitated allegedly 3.3 billion yuan in loans as well. So certainly, as we said, part of that broader anti-corruption drive that President Xi has been spearheading for quite a while now, and it's something that he actually had claimed initial success on as well of late. But we'll leave that there. We, of course, are keeping on top of it. We'll also take a look at what's happening in the pre-market and how we're setting up for the session today. Yeah,
we're looking at about a 1/10 of 1% to the upside in the Hang Seng Index. In fact, we traded flat yesterday. Futures were flat going into the morning overnight electronic session. So nothing much to talk about on an index level here. There might be some as far as some earnings reaction is concerned. You have a couple of other sort of stocks to watch here from, in case you missed it, Tencent is reportedly looking to tap the offshore bond markets in terms of both a dollar and maybe an offshore renminbi cash call in the debt market. That's number one. Cathay Pacific out with some, I think, good guidance here as far as next year is concerned. Flip the boards, please, if we can. So by the end, I think by January of next year, they expect to be back at pre-Rona capacity as far as flights are concerned. And that's, of course, this convertible bond here, Belle.
Yeah, we're seeing sort of possibly more debt issuance coming in from Chinese companies. Tencent was another one we were talking about as well. But big debut, and we've been marking this throughout the first 20 minutes of the show, but SF Holdings is going to be making its listing in just about 5 minutes' time. This is the second biggest IPO we've seen in the market this year after Medea in Hong Kong as well. And also, actually, we've just got some confirmation coming through in terms of who's going to be the next US trade rep. And this is someone very much in Robert Lighthizer mould.
Yes. So we now have confirmation to our Bloomberg scoop earlier on that Donald Trump has now nominated Jamieson Greer as the U.S. Trade Representative. We'll see, of course, what happens with that. We've unpacked that story, and as Belle was pointing out, maybe just an extension, really, of Bob Lighthizer a couple of years ago. There's some fantastic context, by the way, on the story from our colleagues who broke it initially, and really his initial stance that the longer-term exercise is really against, China and that strategic rivalry, and do expect short-term pain as a result of some of the initial salvos here. Speaking of initial salvos, futures are pointing to the upside ahead of the opening bell. This is Bloomberg.
Welcome back. We're counting down to the open, and you're looking at live pictures out of Hong Kong this morning. We are awaiting the listing of SF Holding. This is a major courier company that facilitates, really, deliveries around the Asian region, but based out of China. Very big listing for the market this morning. It's actually the second biggest we've seen this year, and certainly sort of a litmus test, given we've got that IPO pipeline starting to heat up. But it's not just the focus on what's happening in the IPO market. This is a very busy morning, Dave. I mean, we've had the confirmation of who's going to be the next US trade rep. We've got eco data, and we've still got that anti-corruption drive as well in China. Yeah,
the FT report, which we'll get to more details on a bit later on. So we understand that China's defense minister was placed or is placed under investigation for corruption, according to the FT. I believe the Chinese embassy in Washington declined to comment on that report. We'll take you straight now here to the, if not already, the banging of the proverbial gong, or the literal gong, to mark the listing today. So, in case you missed it, price at a midpoint, $34.30 was the price, $750 million US dollars, 5.8 billion US dollars. As Belle was pointing out, in terms of eco data, we also have industrial profits, which are coming out as well, which we'll get to in a moment. But in case you're curious, Jan to October, down about 4%. That's year-to-date, year-on-year. The open in Hong Kong, please, if we can, flip the boards. And I don't believe they've actually hit the gong just yet, looking at how they're holding that baton. Oh, they have already.
It's photo time now.
It's photo time. Okay. How's the stock trading? Do we have it already? Last I checked, we didn't really have any price on that at the moment. I could be mistaken because I have like a billion screens open right now. A couple of things on the board on your right to tell you about. Oh, here we go. We're up 0.5% in the early goings. 5.5%, I think, was your gray market, so it might take time for this to actually get warmed up. We'll talk more about some of the stock movers, and Tencent, of course, in the story there is that they might be looking to tap the offshore debt markets, offshore dollar and offshore renminbi, for a bond offering. Taking a big step back, the reason perhaps we're seeing range-bound trade, if not to the downside as far as Hong Kong is concerned, and mainland China too, it's been almost exactly 2 months since the policy pivot, and in November we've actually seen turnover start to moderate here. So we're still above $1 trillion daily onshore. This is mainland China, but as you can see, the total yesterday was actually the lowest since that week in late September. So could these be indicative, Belle, of waning enthusiasm, or just waiting to exhale, or waiting for something else?
Well, I think waning enthusiasm, you may be seeing signals of that also in the retail side as well, or retail side rather, because we've seen retail investors cashing out of ETFs, for instance, and that really does risk further market volatility if Beijing doesn't follow through on sort of more measures to try and at least cement the confidence, or any sort of confidence we've got in how the stocks market goes from here. But let's get more with our China correspondent, Min Min Lo, joining us. So how quickly are we seeing this retreat now, and what are the implications going to be?
Yeah, so retail investors in China are a very important group to watch because they make up about 70 to 80% of market turnover, as opposed to just 10% in U.S. markets, for example. And according to analysis by Haitong Securities, they are seeing net outflows in these mainland ETFs that track the major indices like the CSI 300, the Chinex, and the Star 50. Net outflows from late October to late November amounting to about 40 billion yuan. That is on track for the biggest monthly sale on record so far. And for context, in October, in 1 week alone, we had inflows of about 35 billion yuan into one ETF tracking the Chinex index. So quite a dramatic reversal in sentiment there. Retail investors really pulling out their cash, waiting for more signals from the government and more clarity on how they will deal with the Trump tariffs and to boost consumer sentiment. And if you look at where we are from the peak in October, the MSCI is now 18% below that. As you said, turnover is about half of its peak in late September, early October as well.
Okay, from the macro, let's talk about micro. Lots of other stock movers too. What's catching your eye today?
Yeah, we are watching a number of stocks. We have Chow Tai Fook reporting earnings yesterday that was disappointing to investors. I think revenue was down by 20% year-on-year. Net income was down 44% year-on-year. But the company is announcing plans to buy back shares up to Hong Kong dollars, 2 billion Hong Kong dollars. So that might help to shore up confidence. We're watching Anta as well. It's announced zero coupon convertible bonds through 2029, offering a conversion premium of 34 to 39% above the current share price, so about somewhere around 104 Hong Kong dollars per share. So we can see, I think that is, it's still trading to the downside, down 2% this morning. We're watching Cathay as well because the company has projected that it will recover flights to 100% of pre-pandemic levels by January of next year. But that said, they just were weathering that engine trouble that they had in September that caused them to ground their entire fleet of that Airbus A350 planes. So they are just, still fixing that. I think they replaced the components in about 15 of those planes, and they're reaffirming commitment to investing in 100 new generation planes next year.
Yeah, but I wonder though if that's going to mean lower airfares for Cathay Pacific, which I don't think
hope so.
Well, I don't think it's ever happened.
So.
I don't think it's ever happened. But we'll still fly Cathay, right?
Well, yeah, it's
I'm waiting for an answer. Okay.
I don't know if I can say it, but I do enjoy it as an airline.
Yes.
Just I wish they'd bring those airfares down a little bit.
They're very expensive. They're very, very expensive. In fact, when you look at it sort of longer haul, anyway. If you want to find out what's going on here, we'll stay tuned during the break. The RBNZ out with a rate decision. They cut by 50. It's looking like the guidance suggests that the markets weren't as prepared for a higher low on the rate, although they're saying that the cash rate might fall even further if their projections hold. Currently, the reason they say that is the Kiwi dollar is up, not just against it, it's up against everything today as far as its major peers are concerned. So everything but the Kiwi dollar. More on that, of course, later on. Have we showed that yet? Not yet? Okay. Anyway, coming up, we're talking LiDAR?
LiDAR, yes.
So
well, it's essentially what your eyes are and that communication it makes to your brain signal. Think about that. The LiDAR sees and then it computes in the background as well. So this is sort of something that's very key to the whole autonomous driving revolution. And we're going to get more on that next with a key company in this push. That's Hesai, speaking with the co-founder CEO David Lee, joining us just in a couple of minutes. That's next, and this is Bloomberg. Well, China's Defense Minister Zhong Jun is reportedly being investigated as part of a broader inquiry into graft in the military. For more, let's bring in our Chief North Asia correspondent, Stephen Engel. And Steve, this is FT reporting, but what do we know so far?
Well, it's shocking, but also maybe not too surprising. This would be the third consecutive defense minister, either serving or former, to be investigated on allegations of corruption. Of course, Dong Jun was named in December of 2023 after Li Shangfu, his predecessor, was on the job for only 7 months, and he was also ousted on those allegations of corruption and actually convicted within party discipline mechanisms. So for Dong Jun to be now, according to the FT, which cites U.S. officials as saying Dong Jun is under investigation for alleged corruption, indicates just how deep and wide Xi Jinping's anti-graft and anti-corruption investigation and campaign is really going into the rather opaque nature of the People's Liberation Army, the PLA. So, as I said, a bit shocking, but also, given the depth of this crackdown, it shouldn't be too surprising. Wei Fenghe was that other former defense minister who was also investigated for corruption. So boom, boom, boom.
Yeah, it certainly seems like that anti-graft drive is not done just yet. And just overnight as well, we had China handing a suspended death sentence to a former Bank of China executive.
That's right. So that was also carried out earlier this year. Now we're getting the sentencing of the former Bank of China chairman, who is a veteran of the Chinese banking system for decades. I'm talking about Liu Liange. He was sentenced to a suspended death sentence, for accepting 121 million yuan, that's 17 million US dollars in bribes, also illegally facilitating some 3.3 billion yuan in illegal loans in his various jobs over the years in the banking system. The most recent was the former chairman of Bank of China. He got the reprieve because, according to the China Daily State media, essentially it's a reprieve for 2 years. As long as he's in good behavior, he will not be put to death. But he, according to state media, essentially voluntarily admitted to the crime. So they showed some leniency, even though Xi Jinping has vowed no mercy in this ongoing anti-graft campaign across a number of industries, and also, as we heard at the top here, into the military.
All right, Steve, thank you. Thanks. That was Bloomberg's Chief North Asia correspondent, Stephen Engel there. And to another major geopolitical story that we're tracking this morning, Israel and Lebanese militant group Hezbollah have reached a deal for a 60-day ceasefire after weeks of talks mediated by the US. It's a first step toward ending a conflict that's killed thousands of people. President Biden and Israel's Prime Minister both spoke about the deal.
Under the deal reached today, effective at 4 a.m. tomorrow local time, the fighting across the Lebanese-Israeli border will end. Will end. This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again.
I am determined to do whatever it takes to prevent Iran from obtaining nuclear weapons. I have said many times that a good agreement is an agreement that is enforced, and we will enforce it.
All right, let's shift tack to a company that we're tracking this morning, and our next guest runs Hesai Technology, a Chinese developer of sensor technologies that are used in self-driving cars. The technology itself is called LiDAR, or three-dimensional light detection and ranging. Apart from autonomous driving, these products are also used in delivery and logistics robots. The Nasdaq-listed Chinese company is under scrutiny, though, as it was designated as a military-linked company by the US Department of Defense. Joining us exclusively now is the co-founder and CEO of Hesai Technology, David Lee. And David, thanks very much for joining us. LiDARs, I've seen this described, but LiDARs are to vehicles what our eyes are to our brains. So the LiDAR sees, and then the car's computer thinks. But talk us through the technology in a little bit more detail.
Yeah, it's actually very simple. First, you're right. It's like the eyes of the autonomous vehicles. Not only that, I think a better analogy would be it's not only the eyes, it will also be the future of the airbags and seat belts, in the sense that it's actually even better because it scans the road with laser and it finds problems and it hits the brake before you even know at a very fast pace. And this is a life-saving device. I don't want people to think this is just only the eyes. It's really your future of invisible seatbelt and airbags that create this invisible bubble to protect you. And that's why it's enormously important to bring such a technology, hopefully, to every vehicle on the road to save lives.
So we're seeing your technology being used a lot in the robo-taxi market, and some of your customers, for instance, they include Baidu, Apollo, Didi, Pony AI, WeRide. But how do you work exactly with these partners?
We are just the vendor. We are the sensor supplier. We ship them our sensor, and they use it. That's about it. I think one of the usual confusion is that people think that we're using laser to scan the road. Oh, do we have access to data or something like that? It's actually no, because it's a piece of hardware that has no wireless communication capabilities or data transfer capabilities to us, which means that when we ship their units off to the customers. We never see them again. We don't know how they use it. And that's really just the nature of the hardware.
David here. So, I mean, shares, you probably know, up 45% overnight. So clearly someone was clapping in the background. My question for you is, so my understanding is you hold a very dominant position in this market, nearly 40% of market share. And what are your plans to hold on to that position?
I don't look at the market share as the most important thing. I look at how far we have gone as a company in bringing these safety technologies to the rest of the world. If you look at the numbers, right, the Q3 was a very good quarter. We had a record high shipment. That's 3 times of the Q3 of 2023. And then if you look at the global landscape, I think it's fair to say most of our peers, they're still shipping in the thousands level, while we have cumulated shipped more than 600,000 units by Q3, and we're predicting that we will be shipping more than 1 million units in 2025. It's not like one order of magnitude of difference. It's like a 2 or 3 now, right? And then we are able to do that not via cheaper price. We did that via the innovation investment in our core components. And as a result, and if you look at the global landscape, again, 6 out of the 10 global OEMs ranked by revenue are working with us either directly or via their joint venture or partnerships. And I think the other confusion or usual misunderstanding is that most people think that, oh, yeah, sure, Hesai is doing that by losing a lot of margin and losing money and flooding the market. That's actually not true at all if you look at the gross margin number. That's one number I think most investors are excited this quarter. We have a blended gross margin of 48%, while most of my global peers have negative gross margin. Well, if we are shipping 1 million units next year and we already achieved 48% gross margin while my global peers is negative, I tend to argue it's already a different game. And then our Q3 gross profit almost doubled year over year. And I think the other exciting number most people cited a lot is we are telling the rest of the world that we're very confident with our Q4, and we're predicting that we will be the LiDAR industry globally, the first one to ever achieve more than $100 million of revenue next quarter with $20 million of profit. And then we're guiding the full year profitability on a non-GAAP level in 2024. Those are the numbers people probably didn't expect.
Right. Just to ask you on that as well, and thank you for clarifying the misconceptions there. So on gross profit, certainly you're in the green. When I look further down, though, and this might be because you are investing in your technology, R&D is keeping your operating profit under zero currently. Correct me if I'm wrong. Do you expect to continue to run operating losses because you're investing in technologies? Give me a sense of those two things moving forward. Wall Street wants to know about that.
Absolutely. That's an excellent question. I think that there is a time delay in this business in the sense that we did invest a lot into our R&D. And if you purely look at our R&D investment, in a way, it doesn't justify the revenue for the year, but that's our investments for the future. So now all these things are paying off. For the past 10 years, we invested heavily on the core components, on manufacturing, on ASICs, and now those are paying off. And what we see is that we are doubling our volume, more than doubling every year. And then we're expecting that to continue next year. And then we also try to drive down the cost, because that's the only way you can bring millions of units to all the vehicles. But now we're seeing the light at the end of the tunnel in the sense that we don't have a skyrocketing R&D anymore. It tried to stabilize while the revenue and the volume are continuing to grow at a very fast pace. So that's where we see the chance of profitability. And that's why we're already guiding full year profitability for the non-GAAP level of 2024. And we definitely expect this to continue in 2025.
David, we do need to ask about something that can impact your appeal to investors, and that is the designation that the Pentagon is giving you, because you have been put on a blacklist of Chinese companies that are affiliated with the military. We do know that you're planning to sue the Pentagon on that basis, but talk us through where that stands today.
Yeah, well, you're not the first one to ask. So, yes, we were listed by the DOD on the 1260H. And a quick correction, we have already sued the Pentagon. So we were listed in January, and then we were momentarily removed. Here's the nuance of this. And we see that the DOD removed us from the 1260H list. We believe this is a way to recognize and correct their erroneous and incorrect decision from January. So we were actually glad to see the removal. Well, it was very disappointing that they start another effort of relisting us on a different basis. Well, but we have always maintained our position that we believe we were wrongly added to this list. And if you look at it, the reasons, and if you first look at the products, right? We are strictly commercial and civilian use. When we say this is certified by the Department of Commerce. And the other thing is we have zero connection to the Chinese military or really any other military body. So if you put things together and if you look at the evidences the DOD uses, it's very easy to figure out whether it's solid evidence or not. That's the reason we sued them in the first place. And again, we were happy to see the removal for the first time. Of course, they relist us. We'll continue the ongoing litigation, but we remain optimistic that this one eventually will be clarified.
The other geopolitical risk or risk that I can see from that standpoint to the business is the risk that the US government essentially bans the use of Chinese autonomous driving software. So I'm thinking about WeRide, Momenta, Pony AI. Do you see that having any impact on your bottom line as well?
It has not directly impacted us, but I think this is a great question in the sense that I do agree that when we are talking about the data, when we are talking about privacy and proper regulation on those industries is warranted across globe. What we are glad to see is that LiDAR today is still being recognized as a pure hardware, meaning that it does not have the capability to wirelessly transfer the data. So it is scanning the road, but there's no way that this should be a concern for national security, data security, or even privacy in the sense that it does not capture the facial feature of any person. So with those, and we will fully comply and of course work with the regulatory agencies on those sensors, but we see as a less of a concern or should be really zero concern in the grand scheme of the connected vehicle and the data concerns.
David, from someone who's in the industry, I need to ask you a big picture question. Some people call it autonomous driving. Some firms call it, I think the term is full self-driving. How far away do you think we are from mass adoption of the general concept, David?
Depending on who you talk to, right? If you talk to Tesla, they might give a very different number than the rest of the industry is expecting. What I think is that if you think about the all scenario, all roads, all condition, fully driverless, that is an extreme case, and that is probably years, if not longer. But the truth is that if you look at what the technologies can do today, and they can do very well in a confined zone, in a port or factory or in a lot of places already. I think a right way to do that is to slowly expand we call that ODD, and then make cover more and more region. And that's a more practical approach, and I believe that that's actually happening in the near future. And a lot of the companies already gain a lot of ground recently.
David, in 10 seconds or so, I need to ask you, do you supply Tesla?
It's not a question I can directly answer.
Okay, we'll leave it there. Thank you so much. Fair game. Let's talk again. David Lee, co-founder and CEO of Hesai Technology. Thank you so much for your time. Stock was up massively, 45%. Listen to the guidance there from the company going into non-GAAP profitability on the fiscal year. Coming up in the next hour, we'll talk markets with Robeco, plus the CEO. And speaking of earnings, another company head will be joining us on set. We're talking about the tofu business.
And plant-based milks.
There we go. Plenty more ahead, suffice to say. This is Bloomberg.
Welcome back to the China Show, taking a look at how the Hang Seng is trading half an hour into the session, and it is flat. Pretty much flat as attack today. We have seen trading volumes looking fairly thin as well. There's just a lot of event risk, it seems. We've got that Trump cabinet filling out. We've got more picks coming through. It's really shaping up that sort of consensus around tariffs and quite a hawkish stance on China. You can add to that sort of the outlook for rates next year. Is the Fed going to stay higher for longer? You've seen retail investors sort of enthusiasm for Chinese equities waning. I mean, there's a lot of different headwinds facing these markets.
Yeah, I mean, speaking for higher for longer, I think the RBNZ, if the additional projection from the central bank does not come to fruition, it looks like the landing based on their current official cash rate target for mid of next year is only 2 more rate cuts from the current level, which if you think you measure it from the yesterday before they delivered 50 basis point cut, I think it's about 50 higher than what the swaps are projecting. So I think the other big story too, and we'll talk about this more later, is the Kiwi dollar's up against everything today, maybe on just that adjustment there along the Kiwi dollar. Plus it's Thanksgiving, right? So people might be just going out of their way on that as well. Anyway, the other one that we thought was going to deliver, no pun intended, but delivering half of the gray market is SF Holdings. So fairly big listing, 750 million US, up 5% in your pre-markets. They priced at the midpoint of the range, so they left some money on the table, as our folks are pointing out here. So up 2.4% in the first 30 minutes as a public company in Hong Kong.
Yeah, which probably isn't too bad for an IPO these days. I mean, Nadia, probably something similar in the reaction we've seen since. And this issue price, to note, it's actually a discount to the share price in mainland China of around 25%. Yeah, but certainly an IPO we're tracking, the second biggest we've had in Hong Kong so far this year. Broadly, what we're seeing in Asia ex-China in the session today, it is...
Nothing happening.
Yeah, kind of. Yeah.
No, it's very difficult. These days are difficult for financial journalists to come up with headlines that catch your attention.
To be reductionist and to think of the reasons why.
Trading sideways, changing directions, lackluster session, lack of conviction. Sri Lanka out with a rate decision just now. And by the way, I think we have a special guest in the next hour of Bloomberg TV to maybe talk us through this. Sri Lanka is setting its overnight policy rate at 8%. That's a rate decision coming through, of course, just now, along the new framework, of course, that the central bank has put in place. Speaking of new framework, there we go. The central bank governor will be joining us in the next hour of Bloomberg TV, 11:40 if you're watching out of Hong Kong, Singapore, Beijing, and Shanghai. Okay, speaking of new frameworks, the S&P 500, so we're starting to get more targets coming out from the sell side going into next year. You might have heard Goldman Sachs, Morgan Stanley at 6,500. Deutsche Bank in the last, I think, 36 hours has put out a 7,000 target on the index. We've hit a 52nd straight record high on the S&P overnight. So this one has just been punching through the ceiling. We're currently at 6,000, so just do the math between 7 and 6 and takes you into that as well. Right, so in the event we do get tariffs, and one of the risks certainly that has come front and center of late is the prospect of tariffs and what that means for earnings, what that means for inflation. We spoke with BNP Paribas earlier on the China show. Nadia told us how they would position in and around what we don't know, what we still yet to know, of course, around tariffs. Have a listen.
In terms of our positioning, it would be really trying to make sure that we're less indexed on those companies in the consumer and the retail sector that would have to bear those tariffs and be more exposed towards the domestic companies that have that do not face any of these tariffs.
Let's bring in Joshua Crabb, head of Asia Pacific Equities at Robeco. Nice to see you, sir.
Good morning.
Tariffs. So does Trump, tariffs, stronger dollar, higher 10-year yield, bad for Asian equity markets? Is that an assumption I can make going into next year? Does that hold, or is there something wrong with that formula?
I think that's the view.
Okay.
I think what's interesting in this is that's what people are thinking. It feels bad. But I think if we sort of consider where the yields have got to, consider how much strength we've had out of the DXY, we consider where the valuations sit, we still think there's a lot of opportunities within the region.
Talk us through those opportunities, because I guess to a certain extent some of those headwinds have already been priced in.
Yeah, so again, the easy answer to this is the domestic stories, right, where you don't have to worry so much around tariffs. If we look at markets like Southeast Asia, domestic consumption's big. They probably are not losers out of tariffs. The friend-shoring element is something that can be quite beneficial to them. These economies are starting to pick up, particularly Indonesia, Vietnam, and the Philippines. And the valuations are looking very, very attractive. So we think that's an area that's interesting to look at. India. That's the story that everyone logically goes to. It's been a great story. Everyone knows it. It had been very, very expensive. So we'd gone into a couple of headwinds. We've seen issuance, then we saw a weaker, earnings season, and then we've seen some of the issues around Adani recently as well. And what that's meaning is that the valuations are pulling back, and that's going to open up some opportunities as well, because the structural story remains in place.
Yeah. So what exposure would one lean into as far as India is concerned going into next year?
I think that depends where those selective opportunities come up, to be honest. It's areas like, consumption, et cetera, are quite good. There are going to be select opportunities in infrastructure build-out, and it's not always clear-cut. Like sometimes the most obvious plays trade at big premiums. One of the things we really like about the Indian market is it's very broad. It's not very, very concentrated as we see some of the other markets in North Asia. And that means if you're willing to dig around a little bit, there's always great opportunities to take advantage of at decent valuations, even if at a headline level it's a bit more expensive.
And the earnings visibility around the greater part of the Indian equity complex, how visible are earnings right now, given where valuations are, of course?
Yeah, I mean, a lot of this is going to come down to some of the capex cycles that we're seeing, and that always levers a little bit on what's happening from a fiscal position. But we do think there is, a very clear path to what needs to be done. Infrastructure spend is going to have quite high returns. It's like they need it. Everyone's been over there and seen, the outlook that we have from that. I think one of the other things, just going a little bit back to tariffs, again, we know the negatives of tariffs. But there's a few things that people should also consider. One is the fact that, trade with the US has become less, over the last few years, and intra-Asia trade has become more important. But the second thing is there will be offsets. So what can Asia do to help itself? First of all, there can be domestic fiscal stimulus. And the more concerns over the US, the more of that we will start to see. Secondly, yes, the rate cuts have come off a little bit, what the expectations are, but we are still seeing rate cuts. And that gives the ability of economies in Asia to also cut rates. So you're going to get some domestic monetary and fiscal policy starting to come through as well.
How much do you need to think about where oil prices go next year as well? We just had the news around the ceasefire, for instance. That could be something that leads to a drop. But what are you thinking around that and how significant it could be?
Yeah, I think geopolitics is going to be the big wild card, right? Whether that's politics, whether it's a spike in oil price, whether it's going to be, tariffs leading to inflation, whether it's going to be speculation about, devaluation of an RMB, etc. So I think these are the things that are pretty hard to sort of, to build probabilities into. They tend to be, pretty bifurcated in their outcomes. Yeah. So I think it's always about thinking about what's in the valuation for the companies you're looking at. So if it's something that you think is quite well reflected, then that can be an opportunity. Or you choose, as we sort of said before, to pick markets where that's less of a risk. Parts of Southeast Asia, stock selection within markets like India, and also within China. I mean, it's a market that's had a bit of a bounce. The valuations are coming back down to those sort of floor levels we've seen over the last 5 or 6 years. So again, that gives you opportunities at a stock level when everyone's speculating about what may happen at the market level. But we do think there's a lot of domestic-orientated businesses that are taking share domestically, and that's unlikely to be interrupted by geopolitical issues.
Do you have higher direct exposure to China now compared to 2 months ago when, right before the policy pivot? And how have you managed to that exposure given just the last 2 months have almost been a universe in itself, this sort of up and then slightly more down.
Yeah, absolutely. So I guess our general view is when you sort of get down to that when you start getting the single-digit forward multiples for China, that has been a flaw, right, going all the way back to sort of 2014. We're coming back down to that, right? So we saw this pre-COVID, then the COVID restrictions came off and you saw the 60% run, then we came back down, and we've had the run around the policy stimulus. So for us at that level is where you definitely don't want to be underweight, right? Because you never know what event's going to come up to drive that sort of rally, and you don't want to be having to chase your tail. I guess one of the problems is people forget is China's still a really big market. If it goes up 50 or 60%, people are going to have to react to that. So we like to sort of make sure we don't have that exposure. And when we do see those positive elements, we try and again focus on the stocks that we like. If we feel they get too stretched in a short period of time, tactically we may take a little bit of money off the table, which is what we've sort of done in this process. But again, as we get down to that valuation floor, we think you want to have a sort of neutralist stand and focus a lot more on the stock specifics.
AI has been the dominant trading narrative for a lot of markets this year, even in Asia. There's Taiwan and Korea and to a lesser extent Japan. But do you see that theme also staying intact?
Yeah, I think that's an interesting one. I think that comes back to the US market. So the US market's expensive, right? It doesn't get a lot more expensive than this. Now, that means two things can happen. Either we maintain this current trajectory where the US earnings has been strong and it grows into it slowly. That's probably a good scenario for Asia because then growth's intact, maybe a little bit less rate cuts, and then I think people will start to look for other opportunities in cheap markets like Asia. The other perspective is we see some weakness coming through in earnings, then the focus goes back onto the high valuations, and that's probably a bit more of a concerning sort of factor. So I think it's sort of interesting if you look at this from a big picture perspective. You have an expensive US equity market. You have bonds, which are now getting back up to that level where it's an alternative. You're getting paid to wait. Credit part of the market is, the spreads have come in quite a little bit as well. And you've got Asia, which is quite cheap. So in some ways, Asia is quite an interesting for at least its option value on that growth continuing.
All right, Joshua. That was Joshua Crabb, the head of Asia Pacific Equities at Robeco. And also something to note this morning has been the RBNZ decision. And we saw the central bank. Pardon?
There's more now, I think, coming through.
Yeah, we've got the press are just underway. So just to get the headline on this, so the RBNZ cut rates by 50 basis points to 4.25% earlier, so very much in line with what economists have been seeing. We've got the press conference just starting here. The first question to Adrian Orr has been whether the new projections that the bank has put out show the pace of cuts is going to slow. He's saying their forward projections don't show the pace of cuts slowing and is consistent with a 50 basis point cut in February. The RBNZ has also said they expect to be able to lower their official cash rate next year, now at 4.25%. So we had seen the Kiwi dollar really gaining against all major currencies. We have seen it just pairing a little bit on those comments regarding projections.
Yeah, and you can turn more to your Bloomberg terminal for more on this. Certainly, more than any other decision recently, this one probably needs more context given, again, out of the gates, the first thing he had to do was clarify the messaging and massage where markets think. And as you can see, markets are listening, right? Spiking the Kiwi dollar, top left of your screens, and we're pulling back from those levels right now. TLI Vigo gives you that important and crucial context to make your investment decisions, hopefully wisely. Anyway, coming up on the China show, we'll be speaking with the group CEO of Vitasoy International to discuss the outlook. They just reported earnings amid concerns over the health of China's consumer sector, which I believe is a big market there for the company. Plenty more ahead. This is Bloomberg.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to watching the China show. Let's talk about Huawei. So the company will be stripping its smartphones and tablets of Google's open source Android from next year. Now, the move highlights certainly its ambitions to pivot away from U.S. tech. Let's bring in Gao Yuan, who joins us to talk us through this. Certainly, well, let's start with that. What are the biggest takeaways here from the Mate 70 event?
Yeah, thanks for having me. So Huawei has released a bunch of new phones. They call it Mate 70. It's a huge family of phones. They have like Mate 70, 70 Plus, 70 Pro Plus, 70 Pro, lots of phones. So it was the largest product launch of Huawei for the year, targeting mainly the holiday demand. So apart from the phones, they also have some like smart watches and 1 million RMB luxury car up in the pipeline. So there are lots of things happening there. For the Mate 70 phones, the price range is starting from some like over 5,000 RMB to all the way up to more than 10,000 yuan. So they're clearly targeting Apple's camp in China.
Gao, what's the big driver for developing an Android-free operating software? Because I can sort of think of two reasons. You've either got that desire to totally de-risk from the US, or you just want to have your own technology so you're not paying Google either.
Exactly. So I think it's mostly the first reason. If you remember last year when they released the Mate 60, the predecessor of 70, that was when the U.S. Commerce Secretary Gina Raimondo was visiting China, and Huawei said, hey, this is a good chance for us to release a new phone just to flex our muscles and show the U.S., hey, you may be sanctioned me, but I still got some really good phones in our sleeves. So there were lots of discussions about the processors from last year's phone, but this year the focus really shifted to the operating systems. They call it Harmony OS Next, which is actually the first Android free operating system developed by Huawei. But look, Huawei executives have been pretty clear on that one, actually. They were saying they probably need another 2 or 3 months to improve the user experience of that operating system. But starting from next year, all the smartphone and the tablet product line will be using this Harmony OS Next operating system in the future.
Gao, what about the efforts around the semiconductor production? Because we haven't really seen Huawei able to go beyond 7-nanometer technology at a time when Apple's looking at putting 2-nanometer into the mainstream. So what's the latest on their development project?
Right, that's a big challenge for Huawei and also for China as well. Yes, you're absolutely correct. Qualcomm already have like 3-nanometer chips. Next year, TSMC will probably make 2-nanometer chips for NVIDIA and probably Apple. But Huawei and largely Chinese chip makers are stuck into this 7-nanometer technology. So they are trying to make some improvements, upgrades, so they can call it like N+2, N+3, but essentially it's still a 7-nanometer technology. So it's for product-wise, it's gonna greatly lag Huawei's capability in the competitions from the hardware. And especially when you are playing games, it's probably not the best choice. But Huawei is trying to mitigate that with for example, for the Mate 70, they packed 4 cameras on the back. They're promising the good picture quality, stuff like that, good communication capability, all the kinds of things that can mitigate the lack of most advanced chips.
Yeah, not to mention that trifold phone. That was our Bloomberg Asia Tech reporter Gao Yan then in Singapore. And shifting from consumer electronics to cars now, because the growing prominence of Chinese automakers is coming at the expense of their once unbeatable Japanese rivals. Toyota, Honda and Nissan have seen their share of key markets decline as names like BYD and Li Auto start to catch up. That's according to exclusive Bloomberg analysis of vehicle sales and registration data in several Asian markets. Dave.
Yeah, I think Nissan has been taking a lot of the headlines recently. Certainly there are company-specific issues. There's a broader shift, of course, which we'll get to in a moment, Bill. But really, when you look at shares of Nissan, this is price to book. This takes you all the way back to about 1990. you really see this incrementally falling. And currently, and we're going with the headline, we're now below a quarter of book value, which is net liquidation value. And you just have to look at the news flow this week, right? So the FT, I think, reporting yesterday that Nissan is looking for a strategic longer-term investor. Some of the analysis coming through out of our Bloomberg intelligence folks suggests that they might actually need to do really something about some of the structural issues. But yes, this chart really says a lot about the changing of the tide belt.
Yeah, for more on that, let's bring in our Bloomberg transport reporter, Nicholas Takahashi in Tokyo. And Nicholas, I'm sure it was a lot of number crunching, but talk us through the main takeaways from the data.
Sure, thanks for having me. So what we did is take a hard look at how Japanese car makers are doing in China and some of the major markets across Southeast Asia. And while a lot of interesting trends did emerge from those numbers, our main takeaway is that in China and Southeast Asia, Japanese car makers have been the biggest victims so far of the rise of Chinese EVs. In China, EV brands like BYD, NIO, and Geely have been dominant in now what is the world's biggest car market. And across Southeast Asia, namely in Malaysia, Indonesia, Singapore, and Thailand, long historically considered strongholds for Japanese car makers like Toyota, Honda, Nissan, brands we've all known for a while now. They're starting to lose ground to these Chinese car makers, and that signals a big shift across the global industry.
Yeah, Nicholas, you've touched on this already, but I wonder if you could unpack that even further. How much of a problem really has this resurgence or the surge of Chinese EVs contributed to these massive troubles Nissan finds itself in right now?
Yeah, like you said, Nissan's had a heck of a couple of weeks. When it announced earnings earlier this month, it had to drop its annual fiscal guidance by 70%. It also logged a 90+% drop in net income. And as was mentioned earlier, Nissan has been going through a slow decline for some years now, especially in the post-Carlos Ghosn era under Chief Executive Officer Makoto Uchida. But in recent terms, the EV shift in China and then the advent of hybrids across North America has been sort of a dual blow to Nissan, which hasn't been able to roll out new cars as much in those markets and much less EVs in China. So the damage at Nissan, while it is hemorrhaging still, it is substantial. And this shift in Southeast Asia and China, while it might not be the fundamental or initial cause, might have pushed it over the edge.
So what can Japanese car makers do to fight back?
Well, in recent years, we've seen big investments in new technology focused on EVs like solid-state batteries, onboard software, most of which are considered the advantages EV brands have in China, namely BYD. And those investments are forthcoming. Brands like Toyota are planning to roll out EV lineups by fiscal 2026. We have yet to see much progress on that front. If anything, big car makers like Toyota, Volkswagen, and others in the US and Europe have rolled back EV goals. So the next inflection point, I think, further down the line is what EVs we see come out of these Japanese car makers and whether they can make ground that they've been losing to Chinese EVs.
Nicholas, thank you so much. Nicholas Takahashi there, our transport reporter in Tokyo for us. We'll be back in a couple of minutes.
Taking a look at how some key stocks are faring this morning. We've got Korean chip stocks under pressure here. We've heard from Vivek Ramaswamy saying that the CHIPS Act is wasteful, and that's been really one of the key question marks. The US CHIPS Act has the possibility to give billions of dollars in financing, grants, loans to Asian chip makers to try and bring their advanced manufacturing facilities to the US. The Trump team is saying, you know what? Tariffs could do the same job. We don't need to give that sort of money to attract them. Vitasoy, of course, whoa, look at that big jump there today.
Yeah, up the most, I believe, since in 24 years, and quite timely, in fact. We have the CEO coming on in a couple of minutes. This is Bloomberg.
It's 11:29 a.m. if you're watching in Tokyo. We are just about to go into the lunch break there. Stocks are a little bit under pressure, and that is as we also continue to track the Japanese yen trading around 153 right now. But actually BNP Paribas was saying this could be the market that continues to stand out into 2025 if that strong dollar dynamic persists. The yen stays weak off the back. That supports the exporters in the country.
Yeah, and everything else that's made Japan great again in the last 2 years or so will be able to have more runway if the dollar continues to remain strong, right? But that's a big if. And that's also assuming the BOJ is able to do what it's planning to do, because I think one of the other calls out of BNP is how you play Japan is you play the financials via the banks. So that's the call that came out of that conversation. Today, Asia Pacific, we're slightly, it's very generous, very little to the upside. Right now, in fact, just as I speak, we just turned unchanged. There we go, live TV, folks. A 1% in S&P futures. In terms of sector movers, we're almost split right in between. There's not a lot of volume coming through. Of course, it's a truncated trading week in the U.S., which, by the way, overnight hit a 50-second record high in the S&P 500 overnight. Okay, yeah, so apart from all of that, why don't we talk about the micro here and some of the corporate stories that have been making headlines?
There's really a standout, and I'm actually just taking a look at the SINS function for Vitasoy. That stock is up right now 23.5%. It is the biggest jump we've seen for the company on record. So we're talking a very big move, really, that we've seen of late for Vitasoy. One of the best performers, actually, in Hong Kong in the past couple of months, really defying the overall market volatility that we see, these concerns around the outlook for Chinese equities. But let's get more now. Joining us exclusively is the group CEO, Roberto Guidetti. And I'll tell you what a moment for you to join us when we have just seen this.
Did you plan this?
No. No.
Okay.
Yes. We were just checking as we were coming in. Good time to show up.
Yeah.
Absolutely. We want to know, I guess we can get to the earnings, and maybe that plays into the story, but why have we seen this sort of performance of late?
Well, look, there are a few factors. So I would say that overall, this sector, we often talk about the China situation. I mean, 54% of our business is in mainland China. 54% of the revenue of the group is in mainland China. And we've been talking about retail stays in mainland China, a bit of growth, but not super exciting. But in our case, similar to few other consumer categories, beverages are actually up. So beverages, we compete in plant milk, soy milk, and tea. Yep. So beverages are up between January and September, like 7%. And if we are looking at what is driving that, basically is a effort from companies to really stimulate consumption. So if you're looking at media investment over the first 9 months of the year, is actually up significantly. And if you're looking at prices, have come down. So there has been an effort to make sure that in the macro context, the brands are becoming a bit more affordable. So more media, pricing more affordable, and then innovation. And the biggest trend that has happened over the last period has been the no sugar, low sugar in mainland China is a huge, like 55% growth versus previous year. So transforming the market from 10% of ready-to-drink tea to 20% in a year. Now, our company is operating a bit at the intersection. We have 50% of the business, more or less, in soy milk and plant milk. Growing, the dairy industry not doing as well, but we're growing that business. And then, of course, tea is now in a good spot in terms of growth. Shareholding, we're looking at the changes in the stock price as a bit of an indication of the upside potential of this company. If we're looking at mainland China, I think we talked last time we were here. China is a huge market, but the per capita consumption is still relatively low compared to some other markets in Asia or around the world. So the idea that a company can execute and actually drive consumption this way is one growth vector. For a company like us, maybe again explaining that the situation of the shareholding, we have huge opportunity to expand further. We are primarily in the south, and we have another area of strength in central China and in eastern China. But broadly speaking, northwest, there are many areas where the company can actually expand. And then innovation. We have a company who have systematized innovation. So innovation is not casual and random, but basically it happens every year. Yep. And I think what we've done over the last few years, we went from launching new platforms which require maybe education, which requires higher revenue per case, which in this macro context is not ideal, to actually do innovation on the core. So, for example, flavored soy milks that we have not done in the past, or like, for example, innovations like we have a big lemon tea business. We'll launch a VLT 0. All right? This is very, very trending, and for people who are concerned about frequency of usage of the original, they can move to 0 and therefore. So I think those are some of the highlights. Okay.
You mentioned price, and I can't help but pick up on that too. Like, how much is pricing a core part of strategy currently to grow? And the reason I bring that up is you mentioned competitive. The other word for that is the lack of demand in the market, I would say.
Yeah.
So how cognizant are you about your price and the price of competitors?
So I would say, David, it depends on the subcategories that you're talking about. It depends on the segments, right?
That, yeah.
And so, for example, if you're talking about our soy milk and soy milk market in general, you're talking about $1+ billion in mainland China of the market. Okay, we have like 60% of it. We haven't really adjusted. And basically the way soy milk is priced in the context of dairy is slightly below, and this works. Now, in the context of tea, is a very different story. In the context of tea, we operate at a mid to high premium, and we have had to adjust a bit and making our portfolio a bit more affordable, because the trend has gone the trend has gone down. So basically from the sort of 5-6 RMB per bottle for like PET bottle of tea, broadly speaking, it has come down to the 4.5, right? And so you have to maintain the ratio versus your competitive set to be able to sustain the growth.
Okay.
Sustain the growth.
What about changes to the product mix? You mentioned there are changes, of course, to consumer preferences, for example. Tea's very big. Do you see yourself needing to change your product mix a little bit further? Thinking about innovation and what that looks like, given where consumers might look like in about 2 years?
Yeah, it's a good question. We as a company have the business in mainland China, but also we operate in Australia, New Zealand. 10%, but very, very important business. Very important business for us, because we learn is the cutting edge for what concerns these particular categories of plant-based. And so very, very important business for us. And also in the Philippines and in Singapore. And so because we play in those areas, we are anticipating a lot of innovation that maybe is not yet in mainland China, but we need to develop in order to stay relevant, to the point about the mix, right? And so I would say that, for example, the oat milk trend, definitely, maybe not as big in grocery, but certainly huge in the coffee channel, right? In mainland China. So you don't see it in grocery that much. There are other options that mainland Chinese traditional mainstream shopper goes for, but oat is one. And then the other one is the tendency for products to become lighter, so less sugar, maybe more aromatic, etc. That is obviously a trend. If you're comparing the brands or the SKUs that are winning now compared to like 10 or 20 years ago, these will be the most relevant changes.
I need to ask, because we're showing this strap here, something that you've said throughout this interview is that the change in stock price could be an indication of Vitasoy's potential. And one company and one individual that certainly seems to be seeing the potential in the company is Philip from Singapore, from Ye, which is also a beverage company there. They've been boosting their stake, quietly building it up. I think it's reported at around 11% now.
12%.
Okay, 12%. So what's the outlook there? Are you open to selling a stake or any further integration with that business?
Well, look, again, the fact that there is interest in the company is a good thing. A recognition that there is potential in the company going forward is a good thing. The way our company looks at this is we as a management team, me as a CEO and my management team are really focusing more on driving the results, improving the profitability. It's for the board to basically, decide, okay, on matters of shareholding.
Right.
But there is certainly an interest, when we're talking about collaboration as a company, obviously, if there are opportunities that are commercially and financially viable, then of course we're always very open to collaboration.
Are you directly in talks for anything? Let me ask you directly.
Not personally.
Okay. Well, it's the company from the board perspective.
Not that I know of.
And when you say you're open to collaboration or define what that might look like, for example. Or am I speculating too much?
No, okay. I think we're here to discuss. So there is a a situation where somehow Vitasoy has a center of gravity that is more around mainland China, Hong Kong, and then I mentioned about South Pacific, Australia. I think Yoast, this particular company, is more focused on Southeast Asia. So from a geographic complementarity, there is a geographic complementarity that is obvious, that everyone knows about. We have not been, again, because we are now performing the way we are, but we've been a bit on a focused on actually achieve the performance we're achieving. And so seriously, we have not initiating or proactively seeking collaboration opportunities, but of course, as I said, always open to evaluate collaboration opportunities that exist commercially, manufacturing, co-packing. They could take different forms.
So sorry, just to really zone in now, you are looking at you are in talks with the business?
No.
Okay.
Okay, just open.
But you're open to open to having discussions.
Like we would be open because we have a JV in the Philippines. We have co-packing arrangement with other companies, right? And so what I'm trying to say is that from a management team point of view, that's not my focus. My focus is to drive the business that we have now.
And so you see sort of what they're bringing is that Southeast Asian business potential?
Could be that there is an interest in evaluating opportunities from a manufacturing point of view, from a commercial point of view, from a synergistic brand portfolio point of view. Could be. But it is, quote-unquote, speculations in the sense that personally, my focus and my team are really working to drive results.
When do you think we get more clarity then on it?
Or should we ask him?
Yeah, should we? Maybe, yeah. That's a good idea, David.
Okay.
Looks like we've got to put in a guest pitch then.
Yeah, I know. Our producers are listening. The other thing, actually, I wanted to ask you about just very quickly here. Obviously, shares are up 23%. I might think this might have to do with a dividend. There's a bigger dividend as well. I mean, so you've upped the dividend is my question. And when shareholders see that, they might think, is this normal? Should we get used to this? What's the guidance from the company?
It's very relevant. Yeah, thank you for asking. So we historically distribute between 60% to 70% of the profit attributed to shareholders. I think historically, if you look at the allocation between the first semester and the second semester, there has always been a bit of a skew to the second half, probably for like conservatism, making sure that in the end we allocate. Because actually the way it works in our industry, due to the seasonality of these categories, that our first half normally, the profit pool is actually higher than the second half. But somehow the dividend was lower in the first half than in the second half. So I think that as of this year, there has been a bit of this feedback has been given to us a number of times repeatedly. Say, okay, maybe we should start rebalancing a bit the way we allocate the dividend through the year. We have an optimistic view about the rest of the year. We don't give guidance, but we have an optimistic view. As I mentioned, the industry and our performance we're satisfied with, profitability-wise also, and therefore this is the reason why we decided to do the 4.1 dividend.
Okay. Well, thank you for the time. Thank you for being transparent, and of course, let's do this again once we.
Fantastic.
If we have something to talk about, maybe we will. Maybe we will. Roberto Guidetti there, Vitasoy International Group CEO. Shares are up 24%. They just reported earnings as well, just outlining the major trends there. In the industry, while we were having the conversation, Belle, some of these other, so the RBNZ keeps giving.
The press is underway right now.
Yeah. Anything? Okay, let me get to some of these things here too. So as far as where they think rates will be by the end of 2025, they do think they will reach around neutral. And the consensus is that the tariff increases will add to inflation. That's currently what we have so far. We're also hearing from the other members, I believe, they're on the stage, and the Kiwi dollar's pulled back a little bit. We retraced about 50% of the jump. Is that the projections do not show that the cash rate dipping below neutral? So based on the information we have now, they've cut rates by 50. And the expectations are rates will continue to fall back towards neutral, but not fall below it by the end of next year. That could change, of course, but currently that's what we're being told from the RBNZ. Plenty more ahead. This is Bloomberg.
Welcome back. Here are some of the global headlines that we're tracking this morning. Israel and Lebanese militant group Hezbollah have reached a deal for a 60-day ceasefire after weeks of talks mediated by the US. It's a first step toward ending a conflict that's killed thousands of people. President Biden and Israel's Prime Minister both spoke about the deal.
Under the deal reached today, effective at 4 a.m. tomorrow local time, the fighting across the Lebanese-Israeli border will end. Will end. This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, well, I emphasize, will not be allowed to threaten the security of Israel again.
I am determined to do whatever it takes to prevent Iran from obtaining nuclear weapons. I have said many times that a good agreement is an agreement that is enforced, and we will enforce it.
Vietnamese prosecutors say property tycoon Trong My Lan must repay an estimated $11 billion if she wants to avoid execution by lethal injection. She's appealing her death sentence after being convicted of embezzling more than $12 billion from Saigon Commercial Bank. She was also found guilty of bribing government officials and violating lending rules.
Okay, let's get to the other story we've been tracking this morning. So China's Defense Minister Dong Jun is reportedly being investigated as part of a broader inquiry into graft within the military. Let's bring in our Chief North Asia correspondent, Stephen Engel, who has the details on the story and what we know so far at this point, Steve.
What we know is the depth and breadth of Xi Jinping's anti-corruption crackdown, if this is indeed true. Obviously, this is an FT report citing unnamed U.S. officials, and China has not commented on this yet. But Dong Jun would be the third consecutive either a serving or former defense minister who's been under investigation for corruption. We all know that Li Shangfu, the former, Dong Jun's predecessor, Li Shangfu, lasted only 7 months in the job. He was ousted on, again, an investigation into corruption. Now, Dong Jun has been on the job less than a year. He was appointed in December of 2023. He last was there, as you can see, I believe this was at he did meet with Lloyd Austin, his U.S. counterpart, at the Shangri-La Dialogue in Singapore. However, he did not necessarily meet with him in Laos recently. There was some, accusations from both sides saying the other side didn't necessarily facilitate the meeting. Well, this could be a big reason if he is under investigation. Again, we're going to try to get corroboration of this story. There you're seeing Lloyd Austin as well as Dong Jun. 16 senior Chinese military officials now, Dave, have been ousted since Xi Jinping began his anti-corruption campaign into the PLA and investigations of, misprocurement of funds in the missile program and elsewhere. So this is something we're going to have to watch. 3 consecutive defense ministers, either former or serving, under investigation or ousted. Allegedly.
Yes, yeah, allegedly. What about the other sort of news around corruption this morning, and that's the death sentence or suspended death sentence that's been handed out to a former Bank of China executive?
Liu Liange is his name. He's the former chairman of Bank of China, as well as other financial positions in China. He's had decades in the Chinese financial system. He has been given a suspended death sentence, so it's a death sentence with a 2-year reprieve. If he's in good behavior, he will not be put to death. Basically, he was found guilty of accepting bribes of over 121 million yuan, 17 million US dollars, as well as facilitating illegal loans to the tune of 3.3 billion yuan. His assets will be seized. If he is given that reprieve after 2 years, his sentence will be commuted to life in prison. So this is a conclusion of what we heard in April, that he was under investigation and being tried for this. He was given the reprieve or leniency because he voluntarily confessed, according to state media. But again, if you go back to Xi Jinping's also simultaneous crackdown on anti-graft crackdown on the financial sector, he vowed back in January, no mercy. And he's really kind of focusing in on power that is concentrated, capital that is intensive, and resources are rich. Those are the industries. And he singled out finance, energy, pharmaceutical, infrastructure, SOEs, and obviously, as we heard just before, the PLA.
How targeted has this become, Steve? This entire, because this has engulfed hundreds of people.
Yeah, hundreds of officials.
Yeah.
Look, we've already gotten suspended death sentences for 3 main executives, former executives. The former president of China Merchants Bank, Tian Huiyu, the former president of China CITIC Bank, Sun De-shun, also the former chair of China Life Insurance, Wang Bin, as well as the high-profile case was China Huarong Asset Management, the former chairman there, Lai Xiaomin. He was executed in January of 2021. Also, another official tied to Huarong was also sentenced to death with no reprieve. That is still pending carrying out of that justice. So obviously it has been very much targeted in the financial sector, as well as any kind of potential malfeasance in state-owned enterprises, for sure.
Yeah, seems like this anti-corruption drive is going on, extending. That was our Chief North Asia correspondent, Stephen Engle, there, and we'll have a lot more ahead. This is Bloomberg.
We're checking on shares of, this is, I mean, in Tokyo we're on the lunch break, but certainly one of the, if not the biggest mover is the shares of Sanrio, which is behind, of course, Hello Kitty and I think Karopi. Anyway, share sale and stock is down the most in about 10 years or so after this cash call out of the company. So secondary share sale there. Speaking of cash calls, SF Holdings debuting in Hong Kong today. The shares were priced at a discount to the mainland listing. It was priced at the mid-end of the range, too.
Yeah, middle of the range, so it gives them a bit of breathing space, I guess, and a 25% discount to the mainland listing. So it's the second biggest IPO we've had in Hong Kong this year after Nadia, and obviously a very big courier company within this part of the world. Vitasoy, I mean, look at that, continuing to see the gains there. That's the biggest jump we've seen on record for the business. This is very big in the beverage space, but we certainly had a few questions for the CEO, Roberto Guidetti, who just joined us about 10 minutes ago, given there's perhaps some interest coming from a Singaporean FMCG company as well. So we definitely wanted to get the latest on that with Yeo.
Yeah, certainly there is interest, the fact that they're throwing money at the company. Now, whether or not this heads into some sort of direct collaboration with the company, so far he says not. We're not at that point of these discussions at the moment.
Initiating it or proactively seeking it, but it does seem like they're open to it. More ahead. This is Bloomberg.